Under the second subchapter, this is subchapter 2.2, fundamental analysis. When dealing with financial markets and being involved in trading, it is impossible not to be aware about the debate surrounding the fundamental and technical analysis. And there are a lot of questions being asked. What is the difference between the two? Which one works best? Can one be treated without the other? It is mandatory to take them both into consideration before taking the decision to trade a specific financial product. What does it mean, fundamental analysis? Well, as a rough definition, when you are interpreting the economic releases, or as you are looking at the economic data of each country or region you are analyzing, then this is your fundamental analysis. When you take into consideration factors like interest rate decisions, like statements made from central bankers, like inflation level, like consumer price index, like retail sales, or on a specific country or region, that all these factors that are likely to influence the move of a currency, for example, or other factors. If you are trading stocks, for example, you're looking at information relevant to the specific stock that you are trading. For example, if you are trading Apple stock, then you are looking for information related to that specific security. Or if you are trading stocks, you also should be aware by the decisions that may influence monetary policy for that region. So the answer is that both categories are important, both technical analysis and fundamental analysis, and one without the other would make any analysis incomplete. This subchapter will deal with the basics of fundamental analysis, what it is, where to be found, and what to expect from it, and of course how it can be used in trading binary options and so forth. Well, to begin with, one cannot talk about fundamental analysis without taking into consideration the economic calendar and all its implications. Now, the economic calendar is extremely important. First of all, it helps you organize your trading activities. You may look at the economic releases due next week. You may look over the weekend what is due next week, and you might decide that depending on the releases scheduled for next week, you should trade a specific financial product or not. For example, each major economic release has a specific time, and this time it is known by markets in advance. So it is sometimes important to see price consolidating before such a release hits the market, and only after that market starts to move. Now, once again, the economic calendar is a series of economic data that is scheduled to be released at a specific date, agreed upon a worldwide basis, and it is well known in advance. Each major economy releases the economic data for markets to interpret at specific times, known by markets in advance. And this is an information that is publicly available, and this is why sometimes you are seeing prices consolidate before a major economic release to come. That is the result of market hesitating to commit to a direction because the lack of additional information. Once the data is released, then the markets make the move. Usually releases like, from the top of my head, like the NFP, the non-farm payrolls in the United States, or the job data, the unemployment rate, the GDPs for major economies, then central banks' interest rate decisions. All these are information that move markets and make trends end or begin. In conclusion, a proper understanding of the fundamental factors that influence the base of financial products you wish to trade is extremely important and should be part of your analysis about getting into a trade or not. Now, where to look for this economic calendar, and there are a lot of of websites and a lot of pages over the internet where you can find all these informations. One of the most popular are the forexfactory.com and the dailyfx.com/calendar, and there you go. We will go with the next recording, and we'll take a look at the factors that are influencing the financial products and what to take into consideration. You will see that under the economic releases are not only the one that influences currencies to move, but also stocks, because you know very well that stock markets are being linked to any central bank decisions. It is a well-known fact that higher interest rate usually is negative for stocks, and a lower level of interest rate is usually positive for the stock market. So anything should be taken into consideration. You will see also the time differences and the specific time for each economy to release the economic data. For example, in the United Kingdom, all the data coming out of UK is scheduled to be released at a specific moment of time. For example, all the NFP, the non-farm payrolls in the United States, are scheduled to be released on the first Friday of each month. The ECB, the European Central Bank, and the MPC, Monetary Policy Committee in the United Kingdom, they are both meeting at the first Thursday of each month. The ECB, after the press conference on the first Thursday of each month, will have 1.5 hours of a press conference explaining the assessment, and then a session of questions and answers begins, where journalists and press representatives from all over the world ask questions and answers are being given. All these are meant to bring volatility to the market, and when you're trading binary options on a short to very short-term time frame, then this volatility influences the positive or negative outcome your trade should have. Now, in the next recording, we will go over the internet, and we're going to go on the forexfactory.com, and we'll take 1 or 2 weeks, and we'll look at each economic releases into these weeks, for you to proper understand the implications they have, and why not, where to look for the information when needed. So stay tuned for the next recording, please.